Guys, okay, it's Monday, 7th of October, and I'm just going to update you on my last week's trading, which was very quiet. I literally just took a couple of trades. Reason was I was on a little break because I just ran a half marathon on the Sunday. So I went to my favourite hotel down on the south coast and a lot of just basically chilling out. But obviously, I still kept an eye on the markets just to see if there were any possible trades. And here is the first one. This is the pound against the US dollar. So for those of you who subscribe to my channel, you know I'm very much a fan of the London breakout strategy, which is such an easy strategy, but there are many variations of it. So this grayed out box here is the Asian session, which runs from midnight to 8 o'clock in the morning UK time. And each of these candlesticks are 5 minutes worth of trading. And this is the pound against the US. So you can essentially, I trade London breakout either on the pound against the US or the euro against the US. And the reason is because they're correlated pairs, which means they tend to move in the same direction. Anyway, as you can see here, what you do is you either buy if it goes out the top of the range or you sell if it goes out the bottom of the range. So I wait for the first full candlestick. And now here it looks very tight whether I should have gone in there or not. But there, you wait for the first breakout after 8 o'clock in the morning. And you can buy or sell right up to 11 o'clock, but I wouldn't give it any longer than that. So I bought there. What I do is I set the trade up. So I'm looking for 20 pips and I'm risking 15 pips. And the 15 pips is usually with the trailing stop. So as the price moves in my direction, I minimize my losses because it moves down in that direction. Anyway, this was the first winning trade of the week. This was on a Monday. In fact, this was actually just before I was traveling down to South Coast. So Monday here, I bought there, and I closed approximately up here for approximately 20 pips. And then as you can see, it starts coming back down again. That was a very, very easy trade. We can probably look at the Euro US as well on the Monday. I haven't actually put the markers in here, but as you can see here, that box there is the Asian session, and you would go in approximately, well, maybe say if you went in here, 11,178. Yeah, I mean, it's gone up all the way to 209. Some traders will look for 30 pips. Some traders will just give it a set amount of time. But as you can see here, time you get to lunchtime, it's starting to come back down again. But we're not worried about that. We're not being greedy. We're just trying to get the 20 pips. Sometimes it's 15 pips, or 15 to 20 pips. I mean, sometimes you're going to lose out because you could have got even more. But that's beside the point. You'd be quite happy with the 20 pips. So we go back to the pound US, and then we go on to Tuesday, which is the first of this month. Now, this was a very interesting one because I was looking at this one, and as you can see here, here's the range here, and it breaks out here. Okay, now technically I should have sold here, and you'd be closing. So you'd be selling here, going short here at 10 past 8, and by about an hour later, you would have been done and dusted. But as you can see, it goes down even more. And the reason I didn't was because, as I mentioned, I set a stop of 15 pips. And here, just on that 5-minute candlestick alone, what's it, 3, 5, 3, 6, it's about 17 pips. And when you get that's quite a long candlestick compared to the others in the Asian session. When you get a big long candlestick like that, more often than not, it tends to reverse back up. So I would have been stopped out. Now you might say, well, why don't I put my stop further on? I could put it for 20 pips, which, that's something I can look at because obviously more often than not, what happens is, and certainly I've been noticing recently, is that the price will go up to about maybe 16 pips, 17 pips, 18 pips, not quite the 20 pips, and come back down again. So the reason is you've got to be obviously wary of your risk management, because if you're going for 20 pips and you're always risking 20 pips, and say, for example, on your losing trades, you're always losing 20 pips, but you're winning 20 pips, that is not good enough. You need to be winning more than what you're losing. And my strike rate is 50 to 60%, so essentially I do need to be winning more. But looking at it recently, especially with the trailing stops, more often than not, it's not hitting that 20 pips if I'd stuck it to 20 pips as a stop instead of 15. So doing 20 pips for 20 pips. So that's something I can look at. Anyway, so that's what happened there. So yes, I did lose out. Am I worried? Well, obviously, no one likes to miss out on a trade, but I was adhering to my strict trading plan, to the procedures of, not going, okay, it worked out this time, but it might not have worked out another time. And it's more important to stick to the process, a systematic process, rather than messing about with it, because then that's just adhere to gambling. That's just taking a gamble on what's going to happen. And you shouldn't do that in trading. So if you look at the Euro US, that was on the Monday. So let's get through to the Tuesday, the 1st of October. Yet again, a very narrow range. Now, this is even worse here, because if we look here, look, we've got a big, actually that box is 820. So the box is about, where is it? Actually, that's 805. So yeah, so I've done the box a little bit too long. So that is where it was, the 8. So this is the 805 one. Even though I've done the box there, the box should be narrow. This is the 805 one. Okay, so I would have gone in here, but that's 111113. Well, maybe it's about 13 pips up. So I might have got away with it, and yet again, I could have had a winning trade. But even if you're not experienced in trading, you're looking at that one. Remember, this is only 5 minutes. You're looking at that one big candlestick compared to the others, and you're thinking, well, it's bound to reverse. And it did start going up, and it could have gone all the way up. So I'm always looking at my risk management. I always think of that first when I do any trade. It's more important to manage your risk. But as I said previously, as you can see on this one, it didn't go all the way up to 20 pips. It maybe went up 15, 16. So maybe that's something I can look at, altering the stop. Risking 20 for 20, because 9 times out of 10 it's not hitting that 20. If it does occasionally, I'm still going to be okay if I'm winning on the 20 pips. And you can see that, look at that big trend all the way down. But there is something interesting I can put on here. If we have a look at the indicators, so I could put, for example, if I put a moving average on here, and I do like trade moving averages as well, you look at the moving average on here, and here we've got a 50, a 20, and 100. And what you do here is you're looking for when they cross. So, for example, when the shorter crosses the longer one, like here, then that would be a buy. So if we ignore the box for now, although again, it is very near to the end of the box here. So say, for example, we've got the 50 is the, where are we? Just make sure I got this right. So we've got the 20. So the 20 is this one here, and it's crossing the black, which is the 50, and it's crossing the yellow, which is the 100, which is even further up here. So say if you went in there, and that is 1111,132, okay? And you go all the way down here, 1132, and then you wait for the actual moving average to cross rather than the price. So 1132. You could do the price, but then you'd be cut out here. So 1132, and you look at their 60, 70, so probably about 60 pips. Done that £5 a pip, that'd be £300. So there is another way. There's technically not on the breakout strategy, but that's trading with moving averages, which I've done other clips on trading the moving averages. So that's something you can look at, but then you're not setting the stops at 20 pips. You're setting it based on the moving averages, and basically you're checking the trade to see, obviously, when the moving averages cross. So it's not an automatic trade out for me. I'd be keeping an eye on it to see when these moving averages cross, and my stop would be different. So I would put a stop in, probably just above the that moving average there. So if that crosses that line, I know I'm going to be stopped out, and it's going to be going the other way. So yeah, and then as you can see, it crosses, it doesn't quite cross, it comes down again, and then it's staying quite close to the moving averages in that range. So that's another way. Obviously, you can look at it. So that was on the Wednesday. That's on the Euro US. We'll go back to the pound US. That's the one I was concentrating. Pound US. Now, I went in about here, and it looks very tight here, but when I was doing it live, it wasn't that tight. And as you can see, it didn't come to anything. So I did lose on that, but it was my risk percentage, very small. So it's no big deal. And then we come up to Thursday. This is Thursday on the pound US. And here we've got it's about 100 pip range in the Asian session, which is very rare. So 100 pip range. So technically I should have gone in here, really. The trouble is, if I'd gone in there 13,157, and then it goes back up to here 57, that's 19 pips again. Because we're such, and you can see there's a big candlestick in the Asian session there. So we're such a huge range like that. Okay, it worked out this time, but again, you know, I mean, I keep saying it's working out, and okay, it has several times in a row here, but at the same time, you know, you have to stick to what you think and what you normally do. So what your system is, and technically what is, you know, based on probability is correct, rather than just thinking, oh, I'm hoping that's going to turn out okay. So that was on the Thursday, and that's on the pound US. And as I say, they're correlated pairs, so they move together. So if we look at this one, we look at Thursday here, bring it up. So this is Thursday. I'll take away the moving averages. This is Thursday. And in fact, even though they're correlated pair, the actual Euro US compared to the pound US didn't do anything. So didn't even come out of the box there. And then we moved to Friday. So it's a big week on Friday. It was non-farm payrolls day, which is the change of a number of people employed in the US. The report comes out. Now, even if you've never traded before, if you looked at that, I'll give you 3 guesses as to when the report came out. Yeah, I don't think you need 3 guesses. It's obviously here. It always comes out at 1:30 UK time. And this is a big 74. Yeah, it's about 60 something pips in 5 minutes, slightly more than that. And as you can see, it didn't do anything from the range, because, okay, technically, you know, I could have gone in here at 9:30, and I have done before, hoping it's going to, you know, obviously work its way out before the report comes out. But look, it's gone back up. And what have we got there? We got 3.2. So yeah, it might just be within my stop. But then, you know, when it gets to here, if the report had been right, it could have gone the other way. Now I know non-farm payrolls report is coming out, because I go to forex.com, forexfactory.com, and it tells you. So here, you know, we've got the currencies down the side here, and then we've got the little boxes here, and the boxes here, the red, the high impact ones, these are the currencies times when it comes out. And you go across to here, and you just click on it, and that's the average hourly earnings. You don't need to understand it all, but it tells you, like, changing the price, business, paper, labor, blah, blah, blah. Actual grain forecast is good for the currency. So that means if it comes in greater, for example, we've got the previous here, the greater is 0.3, 0.4. That means the US dollar is going to go up. So anything like the euro against it or the pound against it is going to go down. It's going to go in the opposite direction. Then we get to the important one, non-farm employment change. And that absolutely smashed it. It was 147, greater than the currency, is good. Obviously, the more people that are employed. 254, it's 147 before. I mean, that's why you get this massive, that was on the Euro US. If we look at the pound US as well, that's why you get that massive spike. See if you get that massive spike, and both on the Euro US and the pound US at the same time. In fact, the Euro US was even a bigger drop. So that absolutely smashed it. And then obviously unemployment rate, I think we all understand that obviously the employment rate is lower, it's 4.2, 4.1, then it's going to be better for the economy and for the currency. So yeah, I tend not to trade non-farm payrolls, because, you know, despite what the predictions are on that, you can get it wrong. Could have gone all the way out. Okay, it worked out in this instance. But yet again, it's more of a gamble. And then we come through to the weekend. We come through to Monday today. Well, look, I could have just about traded the Euro US. I'm glad I didn't, because it's gone back up again. And this is live at about 1:30 now. So it's 1:30 now. There's no big news reports out today. I didn't actually trade the Euro US. I actually went for the pound US. We go across to Monday. And as you see here, now it looks a lot tighter than when you actually do it live. But I actually went in here, but Unfortunately, it went back up again, and what was it, 100, and it went back up to 116. So yet again, how many times have I said that on this video clip? It's gone to 16 pips or 17 pips, but not hit the 20. And if we look at that now, 100, it's actually gone down to 13.065. Okay, it's come back up again. 13.065, 35. So yet again, I would imagine. So even telling you guys now, I can see for myself that obviously having a 15 pip stop here. I mean, all the trades that we've gone through, a few trades that I've gone through on here today, I think you can see for yourself. I can see with clarity that obviously 15 pips is too tight, because most of the time it's going to get to 16 or 17 or maybe 18, but not hit that 20 pips. On the rare occasion it does hit that 20 pips. As long as I'm getting the 20 pip winners, I should still be all right. It's just obviously I'm being overcautious, because you've always got to think about, even if I did a 20 pip stop, it still would be a very small percentage of my account, but I'm just being extra wary, because I know what trading can be like, and I can get your fingers burnt. And it's always better to be overcautious than, if you want to stay in this game for a long period of time, it's better to be overcautious than just go in there, without any sort of fear. But obviously, speaking to you guys now, it's been very cathartic for me to obviously look at it this way and to tell you guys and to see, that obviously. And the thing about the London breakout strategy, it can be tinkered with. You can put the moving averages in and trade it that way. You can trade on different time periods. So these 5 minutes, some do 10 minutes, some aim for different amount of pips. I could aim for 10, 12, 15, 20. Now, I'll probably stick to 20, but now in future I'll be altering my stops, so my trailing stop will be 20 for 20, because get my teeth in more often than not, as we've seen here, it hasn't gone to the 20, it's gone to 16, 17, 18. I think we only saw up to 17 today, didn't we? So, and the very rare occasion it hits 20, I should still be all right, as long as I'm still getting the 20 pips. So there you go. We've all learned something today, guys. So we'll see what happens for the rest of the week. It's only the beginning of the month, so last month was about break even. So hopefully, as we start going from autumn to winter, it should pick up, and certainly the trading should pick up, and more opportunities as the market gets back into full swing. So, yeah, certainly learned something today. I think we all have. And if you want to see more of my trading, then pop along to Around Trading. You'll see certainly more clips of me trading on a breakout strategy. I hasten to say, not all losers. I've had many winners there as well. So, yeah, we'll see what happens for the rest of the week. Have a good week, everyone, and I'll see you